Hey everyone, welcome back to Corporate Decoder. Today, iQSTEL Incorporated just filed this 8K report, and I am seeing a shift in executive pay that is worth digging into. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is making some significant changes to how their top executives are compensated, and it involves both more cash and more stock. So what we have here is a current report filed by iQSTEL Incorporated, known by its ticker symbol IQST on the Nasdaq capital market. It is a Form 8K, which means it is reporting a material event that shareholders should know about. The key date for this filing is the 7th of July 2026. The main event here revolves around item 5.02, which deals with the compensation of certain officers. Specifically, the board of directors of iQSTEL Incorporated approved some amendments to the employment agreements for their chief executive officer, Leandro Jose Iglesias, and their chief financial officer, Alvaro Quintana Cardona. These changes are happening right now. Let's break down what is changing. First, the cash compensation. The CEO, Leandro Jose Iglesias, is getting a base salary increase. His monthly salary is going up from $31,000 to $37,800. This jump includes a previously approved monthly relocation allowance of $6,800 because he is moving to Cyprus. So it is not just a pure raise, but an adjustment for new living arrangements. Additionally, the board approved a 2-month cash performance bonus for Mr. Iglesias. This is being given to recognize the relocation expenses he is dealing with in his move to Cyprus. The exact amount and when he'll get it are tucked away in his existing employment agreement. They've also added some flexibility for annual bonus payments for both Mr. Iglesias and Mr. Quintana Cardona. Now, any annual performance bonus can be paid out starting 15 days after the company files its annual report on Form 10K. This just gives the company more wiggle room on when they can pay out these bonuses. Now let's talk about the equity compensation, which is the stock-related part of their pay. This is a big deal because these changes are not final yet. They need shareholder approval. This is because of Nasdaq listing rule 5635C, which basically says that if a company is giving out a significant amount of stock or stock options, the shareholders need to sign off on it. The existing plans for annual equity incentives are being replaced. Before, Mr. Iglesias could get up to 1 million shares of common stock annually, and Mr. Quintana Cardona could get up to 800,000 shares. Now, this is being replaced with an annual equity performance incentive of up to 50,000 Series B preferred shares per year for each executive. This is a significant shift in the type and potentially the amount of equity they can receive. Series B preferred shares are a specific class of stock that carry different rights than common stock. On top of that, they've approved specific grants for fiscal year 2025, also pending shareholder approval. Mr. Iglesias is slated to receive 20,000 Series B preferred shares, and Mr. Quintana Cardona will receive 14,000 Series B preferred shares. To get this shareholder approval, iQSTEL Incorporated plans to file a Schedule 14C information statement. This is a document that provides information to shareholders regarding matters that do not require a vote, but are important for them to be aware of, especially these compensation changes. Importantly, none of these Series B preferred stocks will be issued, and these equity changes will not become effective unless and until the shareholders give their okay. Looking at the broader context, iQSTEL Incorporated is in the communication services and telecom services sector. They have a relatively small market cap of about $7 million, with their current stock price hovering around $1.06, though it has seen highs of over $10 in the past year. They have around 100 employees. Recent headlines suggest the company is aiming for a significant revenue run rate with a push into Africa and is also focusing on cybersecurity, which is interesting given the FCC's stance. There was also a share repurchase program announced in June, signaling some confidence from the company. Institutional ownership is quite low, with the largest holder, Geode Capital Management, owning just 2.0% of shares. When we look at changes to executive compensation, especially involving equity, it is always important to consider what it means for existing shareholders. Replacing annual equity incentives with a fixed number of preferred shares, even if the potential value seems lower on paper due to the limited number, can still be dilutive if those preferred shares convert into common stock. The fact that it requires shareholder approval is a good sign as it gives investors a say. However, the shift from a large number of common shares to a smaller number of preferred shares could signal a belief that the value of the company's common stock might not appreciate significantly, leading them to seek value through a different class of shares. What I'll be watching for is the shareholder vote on these equity grants. If shareholders reject them, it might suggest a disconnect between management's perceived value and the shareholders' expectations. Conversely, if they are approved, it signals shareholder confidence in management's strategy and their belief that these preferred shares will ultimately be valuable. Given the company's small market cap and the relatively small amount of equity being discussed here, this specific filing isn't a massive dilution event in itself, but it does show management is seeking ways to be compensated, which is normal. The real question is whether the long-term strategy, which includes pushing into Africa and cybersecurity, will materialize into the kind of growth that justifies these executive pay changes and ultimately benefits all shareholders. The market cap being so low at $7 million means that even small changes in share count can have a larger impact on dilution, per S-Hair. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis helpful, please like and subscribe. Join our Discord for more.